Welcome to our Ask an Expert show, where I invite a fellow professional in the cross-border space to come in and talk to me about the issues we think Brits in America need to be aware of if they are going to thrive here. My guest today is Virginia La Torre Jeker. Virginia is a US international tax attorney. She's a member of the New York Bar since 1984, admitted to practice before the US Tax Court, and has plenty of experience with all aspects of international tax and cross-border transactions. Virginia is a contributor in Forbes covering US international tax issues for overseas Americans and foreigners with a US connection. And of course, she is the longtime prolific author of the highly influential tax blog, ustax.org. So what an honor it is for me to have Virginia on the pod today. And there is so much that we could talk about. And I really hope it goes well. So she wants to come back on. So no pressure there, Virginia. But for today, we decided to focus our conversation on the hugely important and widely misunderstood topic of reasonable cause. As in, how to successfully argue reasonable cause for not meeting one's obligations with the IRS, sufficient for the IRS to waive any penalties they have levied. And in the world of offshore compliance, where big penalties are routinely levied, even when no tax is due, this is important stuff that taxpayers, especially those with international affairs, need to understand. So without further ado, let's get into this. Hi, Virginia. Welcome to We're the Brits in America.
Hey, Richard. It's so good to be here with you. I hope you're feeling good, and I'm quite excited about our talk today.
Me too. And let's let people know this has been a hard fought battle to get us together on screen. We've had to rearrange this a couple of times, entirely my fault. First time my kid was sick, he reminded me, and then second time was the weekend before I ruptured my Achilles. But here we are at long last.
Yes, here we are. So let's get into it and educate all the people out there that need to learn about fighting the good fight of reasonable cause.
Fighting the good fight. What a great way of putting it. Before we do, Virginia, I gave you your introduction there, but will you just, in your own words, tell people who you are, what you do, and what qualifies you to help us understand this topic?
I could go on forever, but I'll make it sort of short. I've been practicing for 40 years, over 40 years actually, and my area has been in U.S. international tax. I've lived in Hong Kong, Dubai, a lot of time in Switzerland and overseas in other parts of Europe where I've been assisting people. So my breadth of knowledge is quite broad in terms of dealing with other tax regimes and how they fit into the U.S. tax regime, understanding cultural nuances. I mean, the list goes on, but I think if you've been practicing overseas for a while, you understand that there's a vast difference in your experience level than when you've only been practicing domestically. So I started off with a big law firm in New York and was practicing there for 3 years before I moved abroad. I was at the ripe old age of 29 when I met and married my Swiss husband, and we moved. We left America, and that started my journey. And it's been an excellent experience because you can't replicate that kind of experience when you are abroad and assisting taxpayers who have myriad tax issues because of the different regimes. Your area dealing with Brits in America. I mean, people have to understand a little bit about the UK tax issues in order to really be able to advise someone or have a heads up on the issues because they will be impacting the US side of things. So I would say to people who are out there and needing advice, it's difficult to find the right person quite often because you may have nuances in your situation, but it pays to keep looking for that right person and ask the correct questions. Do your legwork before you hire them. We've had horror stories of international tax lawyers, international advisors, and they're really not equipped. So people do have to be very, very careful.
100%. I concur. The part you mentioned about the needing to, your specialism is obviously US tax, but if you're dealing with a Brit, the need to understand a lot, or at least something about that system, and then not only that system, but the interaction of that system with the US, i.e. the treaty. This is some really specialized stuff. And occasionally I'll bump into someone who will say they've got a cross-border advisor, or say they're a cross-border advisor, and they're really not. They understand everything from a US perspective, but the other part that we just talked about is not there, and I don't believe you can do the job without that. At the very least, you need access to a great network.
Absolutely, absolutely. And as an advisor, you have to, I think, go above and beyond. So, for example, if someone tells me, "Gee, I'm a Swiss national and I'm married to an American," because I'm in that situation or have been in that situation, I know what that means. So I know, oh, you've got to ask them which marital regime have they chosen, or have they not chosen and they have the default one, because all of that will impact the U.S. side, whether they're owning property jointly, even though they think it's all in one person's name. It might be community property under the Swiss marital regime that they're in. So you have to do a little bit of legwork and at least get a broad picture, and then say, wow, okay, this is above and beyond me, or I need a specialist to work with me. It's a mistake to think you can do it all. It's not possible.
I wish more people were capable of saying, oh, this is above and beyond me. This is above my pay grade. I don't know this. I'll help you find someone who does. I wish so many problems wouldn't become problems if more professionals took that approach. But just before we get into the meat of the topic today, Virginia, I'm intrigued. So 40 years as a globe-trotting tax attorney, US tax attorney, a lot has happened in that 40 years. I'm sure from the digitalization of everything, the internet, FATCA, as I understand it, the Bank Secrecy Act, the FBAR requirements
they weren't enforced
in the same way they are now. So I'm intrigued to hear your take on how has your practice and your approach and your perception of the IRS changed in those 40 years?
It's a very interesting question. Let me give you a taste of something with regard to that issue. I had interviewed a very senior person at the IRS about people who are dual nationals, and many times they're accidental Americans and don't really know they've got American nationality. And we had a very interesting interview, because this is when everything was happening with UBS, chasing after people with offshore accounts that hadn't been reported. So many innocent people got very, very burned in this whole time frame. But that senior IRS official said to me, Virginia, the IRS didn't imagine someone could have U.S. citizenship and not know it. So when people would come to us and say, I didn't know I was born an American, it's almost like they don't believe them, and they throw the book at them. Now, that perception has changed over time, because they've learned accidental Americans do really exist. They are a special breed of people, and we have to take their circumstances into account. But back then, no. So much depends on timing. What do? Obviously, no one can answer everything, because there's so much that might remain unknown. But the perception of the IRS has changed, certainly, but I think it takes a long time to filter down. So the senior tax attorneys at the IRS might be very aware of certain issues. And this is happening again today with, for example, Form 3520. If you receive a foreign inheritance or a foreign gift, even though it's not taxable to you as an American, you have to report it on a special form. And if you don't report it, the penalty can be 25% of the value. So this, they are aware, oh, this is causing a lot of problems. People didn't really know about this. We should forgive this penalty, maybe. We should read their reasonable cause statement. That hasn't filtered down yet. So we see over time an understanding happening at the Internal Revenue Service, but it doesn't happen overnight. It takes the Taxpayer Advocate Service. It takes bloggers like me or others that are constantly pointing out the issues and problems for the IRS to finally, I guess, see the light and do something. We always feel they're never doing enough. But as I said, these things take time. Virginia,
can I be an eternal optimist? Can Are you saying to me there is hope that the almost a culture of the IRS around what I consider to be persecution on these issues of innocent people who make innocent mistakes, who aren't trying to do it? Are you saying that that is slowly, you think, perhaps disseminating through the IRS, and maybe there is, as to say, light at the end of the tunnel?
Richard, hope springs eternal, okay? And in my 40 years, I've seen some good things happening, okay? There's a long way to go, but try and remember 40 years back, first of all, we didn't have internet. So, we're all dealing with, where do we learn this? How do we get information? Taxpayers knew nothing, okay? Enforcement wasn't what it is today. So slowly things evolved. The IRS has its own website. Taxpayers have access to a lot more information. Whether they can rely on it is another issue. I think we've talked about that in our private discussions. But the wealth of information is becoming available. We have the IRS oversight with the Taxpayer Assistance Service. We have assistance from them. Okay, they're not the fastest. They're probably overwhelmed. But there are far more avenues for hope than we ever had before, I'm thinking. So hope springs eternal. But
I'll take it.
I get your point. There's still a lot to be done. There is, I don't want to use the word persecution. I think they just don't have a clue. It's like when I spoke to the senior IRS official so many years back, he said they don't understand how someone can have dual nationality and not know they're American. This is just beyond them. So there's so many things. How could you not know if you got a foreign gift that you should report it? Okay. This view, I think, is starting to trickle down, that they get it. People don't always know what they think they should know. The IRS thinks they should know because it's some law on the books.
And then we get into that fine line between, do you really not know? Or is this willful blindness? And having done this now for 10 years, longer, but here in the US for 10 years, it really is a thing. There is a difference between really not knowing something and intentionally burying your head in the sand, or neglectfully burying your head in the sand to not know something. And I think they're right to discern between these two different
and Richard,
approaches.
That's becoming a bigger and bigger problem.
Because there's so much information, right? Exactly. Part of this podcast exists partly for that, partly because I've just been having the same conversation. You've been having the same conversations, I'm sure, but for 40 years. I've been having them for 10 years. I just thought, you started your tax blog, right, to try and get information out there. And I thought, how can I get this information out there on a wider basis? That's part of the motivation for this podcast. But then, the flip side to that is, I guess, it reduces it reduces the potency of the argument. I didn't know, Gov. How could I possibly know? Well, Google. But anyway, I could go on like this forever. So I'm going to have to just wind my neck in. Let's talk about reasonable cause. That's why we wanted to get you on here today to talk about this topic. I think you wrote about it. I heard you talk about it somewhere else, and it's such a misunderstood topic. And so how this manifests itself in my practice is I will meet someone, maybe a prospective client or existing client, and I will almost immediately spot potential issues. And people will just, their go-to is often just to shrug their shoulders and say, "Oh, you know what? I'm not doing anything intentionally. I'm relying on. I've got a tax advisor, maybe." And I'll, if this ever goes, I'll just explain to the IRS. I'll just tell them that no tax was due, and I just to try and explain to me, it's not that simple. And that brings us on to the issue of reasonable cause. So,
yes.
I mean, can you explain to people what is this concept of reasonable cause and why is it important in the IRS context?
Absolutely. So, as you know, if you do something wrong with your taxes, whether it's you don't report enough by mistake, you've done something, or you failed. If you're an American abroad, this often happens. You failed to file what's called a foreign information return that might be relevant because you, for example, own shares in a foreign entity. You may have missed out on one of these filings that you should have done. So penalties, of course, can be assessed. So we have something called the accuracy-related penalty. That's if you have understated your tax due. They will assess a penalty if you've been found to be negligent or negligent in disregard of IRS rules and regulations. But they say if you have reasonable cause for this problem, then we'll forgive the penalty. Similarly, with all the foreign international information returns that are due, if you miss out on one of those, typically you have the opportunity to state your case for reasonable cause, so the IRS will not assess the penalty. Now, reasonable cause, there's different areas where you can look to for guidance as to what it means. And this is where I think people miss out, because they think, oh, well, I have reasonable cause. I relied on my tax advisor. And they think that's enough. They think that's going to get them off the hook. Or they think, well, I didn't know about this rule. What, it's reasonable cause. I live abroad. Why should I know about all the U.S. tax rules? As you said, Richard, Google. Okay, so where do we draw the line? What's reasonable cause in these kinds of situations? And if you look at the general definition, it's reasonable cause means that you've acted with ordinary business care and prudence to learn and understand what your tax obligations are, so you would be tax compliant. So what does ordinary business care and prudence mean? Well, we can look to who is the taxpayer in that situation. Is he a fairly sophisticated business person? Is he someone like Richard Taylor, who has heard of these concepts before, who knows he can Google and go to the right resources, or can pick up the phone or write an email to a colleague and get information, and his education level is at a certain degree so that we feel he can understand, versus someone who might not be at that level, someone who might be, for example, who recently became a U.S. person or was an accidental American and didn't know about all of this stuff. So we're looking at facts and circumstances of the particular case, and people need to understand that their facts and circumstances are critical. A lot of times, and I've heard this and it drives me crazy, a tax advisor will say, okay, well, we'll try and get you reasonable cause. We have a form on our website, like a template, and, you kind of fill in the blanks and we'll use that. Gives me great...
The opposite of facts and circumstances, isn't it? The polar opposite.
Absolutely. So it's really critical that you are going to get the right person who's going to dig in with you and dig into those facts, and who will look at the Treasury regulations. I mean, I'm betting you a lot of practitioners out there who say, well, do your reasonable cause, don't even know there's guidance in the Treasury regulations. And after you've looked at the Treasury regulations about reasonable cause, you can go to the IRM, the Internal Revenue Manual, and see what the agents are told to look for. Use these as your guidelines to prepare a really good reasonable cause statement. That's what I do.
Well,
okay?
I think
never just say, here's the template.
Well, and I think the point here is, think back to these clients, just putting ones with tax advisors out of it for a second, because that's a whole different ballgame. But the ones who say, oh, I didn't know. So I think they perceive that if they ever get a challenge from the IRS and they levy a penalty for not filing certain forms, they'll just say, oh, sorry, I didn't know. Like literally that on a phone, maybe even on the telephone, and think that will be the end of it. And that is so far from the truth. And then just to expand on what you were saying before, and you tell me if I'm right or wrong here, but there's then probably a big difference between the Brit who's just landed, come from outside the US, and maybe where informational reports are not really a thing, and they say a year or 2 years in, I just didn't know, I'm sorry, versus the Brit who's been here 20 years, 30 years, has never filed informational returns, say, oh, no tax was due, I just didn't know. I think it's going to be hard. That's going to be a harder case to argue, surely.
Absolutely. And we go back to this ordinary business care and prudence standard, okay? If you are here for a year in the US, ordinary business care and prudence might not mandate that you start looking right away. But you've been there 20 years or 5 years or a fairly decent amount of time. You must be dealing with tax returns that you're filing. You must be having some assistance, I'm guessing. Or if you're not, you are having to look online for resources. It's not magic that you're going to be able to put your tax return together. So ordinary business care and prudence will mandate you asked questions. You did something. You didn't just say, I didn't know, and it's a big vacuum. That's the issue. Now, the complexity of the law might help you. So if it's an extremely complicated area, not understanding, not knowing, that might actually work, because it's an extremely complex area of the law. You might not know. All right. So the facts and circumstances are absolutely critical. And that's why, as I said, you've got to look to the Treasury regulations. You've got to look to the Internal Revenue Manual. You've got to look to the case law and see, well, what has worked and what hasn't worked. And you will see the positions the IRS has taken in the published cases that I've seen. They're very, very harsh. So we had I always call it the Polish policeman case, because I can't pronounce the name of this gentleman.
I know the one you mean, yeah.
You know the one I mean, it begins with a W. So this poor gentleman, his mom was living in Poland. He was a Polish U.S. person, and he was in the States, and his mom won the lottery in Poland, and she wanted to send him money as a gift after she won the lottery. So he contacted his U.S. tax return preparer advisor and said, gee, my mom wants to send me this money as a gift. Do I have to do anything? Am I going to be taxable on it? Whatever. He asked all the right questions. He told the return advisor about the gift, that it was a foreign gift. And that person, unfortunately, didn't know that you have to file Form 3520. And it was never filed. Several years later, this individual wanted to gift money to his nephew who was in Poland. So he started to do his own research to see, gee, do I have to do anything before I make a gift to my nephew? And then he came across, under, attorney Google, all of this reference to Form 3520, and if you get a foreign gift. So he realizes, gee, I should have filed this thing. Now what do I do? So then he went to like an international tax lawyer and explained the problem. And that person said, well, the IRS has this special program where you can file the late return, and as long as we submit a reasonable cause statement, they may forgive the penalty. That reasonable cause statement, from what I could discern from the case, was a very well prepared statement. And it made clear that he had acted with ordinary business care and prudence, because before his mother made the gift, he went and spoke to his advisor and got the all clear that this was okay and nothing needed to be done.
Virginia, did they have an actual record of that? Because that's huge.
I'm sure he had emails going back and forth. I'm sure that the tax advisor, maybe they had WhatsApps, maybe even if it was just a phone conversation. I spoke to him on such and such a date. This is what he told me. If the advisor was asked, I don't think he would lie, because that's getting pretty serious, right?
That's a huge plus, because a lot of the issues we encounter, that record doesn't exist.
I got you. You. Well, he submitted his reasonable cause statement, which from what I could tell from the case, was well prepared. It covered everything. I'm like, surely he should win. IRS said not reasonable cause. Okay.
Did they explain why?
I think it's no excuse that you didn't know the law, or something ridiculous.
Wow.
And so he had to go to court, to try and get the penalty amount refunded. Now, this is a problem with this Form 3520, is that if the IRS assesses the tax, you can't really go and fight them until you pay the penalty, and then you sue for a refund, basically. So,
Virginia, this is something else that is widely misunderstood by everyone, that you not always you get it depends on how the fine is levied and the penalty. That normally, if they levy a fine, sometimes you get the opportunity to fight it before paying it, right? But other times you have to pay it first.
Penalty. If it's an assessable penalty, you don't get that chance. It's like they can garnish your wages and take the money somehow from you if you don't pay. So that's another complicated topic. Taxpayer Assistance Services Advocate Services has pointed that out to the IRS. It's like, guys, we got to fix this thing. It's still not fixed, but hope springs eternal.
Hope springs eternal. That's going to be our new mantra.
It's got to be. So they assessed the penalty. He paid and then sued them in court. The court reviewed everything and said he had reasonable cause. So the penalty was reversed and they refunded it. The problem is, how much money did this poor guy have to spend? How much time did he have to spend? How much sleepless nights did he have over this, right? It's not just, thank God I won, I got my money back. What about the time opportunity cost that's been gone? So
100%.
That was
we like to talk about it. It's better to prepare than it is to repair, and just get this message out there. If we can help,
instead of defensive.
Exactly. I just want to help people not make these mistakes, because even if they win, the cost in legal fees, in sleepless nights, to your point, I want to help people avoid that. And it's doable. It's just, you've got to be proactive. You've got to prepare.
And as well, Richard, you've got to be prepared that if you want professional advice and you want good advice, you have to pay professional fees. And I think that's a big part of the problem here, that people say, well, you know what, I'll go to Dr. Google, or in this case, Attorney Google, and I'll get it from there. And I get it. There's a ton of information out there. But let me just say, some of that information is wrong. That's the first thing. Mm-hmm. The second thing is, these areas of tax are usually quite complicated. You can't figure it all out without training as a lawyer or having been in the business for a while. You can't piece all together the Google bits and come up with the right answer. I don't know about Chat GPT, or I'm sure you can get a lot of guidance and it will save you oodles of time. But I think at this point in time, I think you still need someone with the experience that you're not going to get it from Google or Chat GPT.
Well, I 100% agree. And more than that, you're not going to get it from most domestic professionals. And I've got a lot to say about this. And it's a perfect segue actually into, let's talk about when someone has a tax advisor. You know, when someone...
That plays into reasonable cause.
Exactly. Right.
And professional.
So let's say I've been levied a penalty. I haven't filled out some informational forms, or 3520 or inheritance, or whatever it might be. Maybe I've missed out some income on international assets. I have a tax advisor. So surely I can just I can just tell the IRS, oh guys, yeah, blame them. I have a professional do my tax returns. It's not quite as simple as that, is it?
Unfortunately not. There's tax advisors and then there's tax advisors, yeah? So it's like anything else. You're going to have open heart surgery. You're going to have the surgery you had. I'm sure you did research. Who am I getting here to do this? Am I getting the best guy? Am I getting the gold standard? Because a lot's at stake, right? I think unfortunately, when people are starting out and getting advice, they don't see it as, gee, there's a lot at stake. They're seeing it as, yeah, I need my tax return prepared.
I need to tick a box. How can I tick a box for the least amount of cost possible?
Yes. And that, I think, listen, for a lot of people, that might work just fine. They have very simple tax situations. Maybe they're covered completely by the foreign earned income exclusion. They don't have, foreign entities involved in structures. They're simple. And those simple cases can absolutely be handled by someone who doesn't have, eons of experience, and they will be just fine. But when you start to get into other things, you need to be careful. So, for example, this Polish policeman who told his advisor, gee, I got this foreign gift from my mom who lives in Poland. Do I need to do anything? The advisor's thinking, well, gifts are not taxable. So no, he doesn't need to do anything. Unfortunately, we have this nuance when you've got a gift that's from a foreigner. How are you supposed to know you have a nuance? Listen, I can't really answer that. Maybe do some research. Ordinary business care and prudence. You don't want to be hung out to dry because you didn't do anything. Okay? This gentleman was lucky in that he did request help from someone who seemed competent. Before he took the money, before he took the gift, that was a huge, important factor for the court. When you are relying on professional
was
advice,
it? Sorry, that was a big factor for the court, was it? This was not. That's interesting.
He tried before he took the action. He tried to get advice.
That's such an important and probably glossed over point by people. Again, it goes right back to our better to prepare than to repair, better to be proactive than reactive. He took advice before his mum sent him this money, and the court, that was a big check in his favor. Okay, take note, everyone.
Because he was acting with ordinary business care and prudence. If you're going to sell your company, Richard, you have due diligence that you do, correct? About the buyer and so forth and so on. Well, it's the same. They're looking at what did he do? What due diligence was done before the deal was sealed? And, he did get tax advice. Now, unfortunately, that person didn't give him the correct advice. He wasn't aware of this Form 3520. So going to professional advice, that can be giving you reasonable cause, but not always. And what the Treasury regulations and the Internal Revenue Manual hint, in my view, is that will really not save the day that you went for professional advice unless you can tick some other boxes. For example, that you've done some due diligence about the competence of this person in the area of international tax or whatever you need. Okay? So, if you have a heart problem, you don't go to a dentist, kind of thing. If you've got an international tax issue, you better deal with a professional who's got the experience in that area. And then you've got to give them all of the facts. Was everything revealed to that person, or were you holding back some information? Very important. And then finally, did you rely in good faith on what that advisor told you? So they're looking at this three-prong test. And, if you can't meet all three prongs, then chances are you're not going to get reasonable cause because you've relied on a professional.
So this for me is absolutely critical because I see this week in, week out. And regularly I will have people, I will recognize if someone's not been filing an informational return or returns or has missed out the 3520 for the inheritance or whatever it might be. And they'll say, well, I've got a tax advisor. And then often two things, the most common thing that occurs after this is it turns out they're paying someone around the corner $400 to do a 1040. And we're talking about complex international assets, trusts, pensions, whatever it might be. And I have some sympathy with these people, especially if they're early in their journey in America. They think that's sufficient. But when I'm talking to a 20-year veteran who, frankly, at this point should know better, I've got less sympathy. And
of course,
I also think about how much I spend on my cross-border tax advisor, my cross-border tax preparer, who is, to our point earlier, US, UK, and understands the interaction between the two. Because I understand the repercussions and the ramifications, of not getting this right and the potential ramifications. So I invest a substantial sum of money, not ridiculous money, but commensurate with the expertise required. And when I get hit with, when I'll meet with people, I explain the virtues of having a cross-border professional, and I'll talk about maybe the cost involved. People will bawl at it and then say, well, it's ridiculous. I pay $500 for that now. It's a false economy, people. Yes, you're going to get $500, but what's the real cost to you potentially here down the line? And people are not willing to spend it. They're unwilling to spend it, and they are either unaware, or it goes back to this point of willful blindness.
Mm-hmm.
And
yes,
I think it's a legitimate question that the IRS asks: is, did you go to a professional with the expertise required to advise you? And if you didn't, you haven't got reasonable cause. And yes, there's a grey area. Yes, it's facts and circumstances, and there are different people. I believe it's legitimate for them to make that mistake, and other people, they were just not spending the required money to do this properly.
Correct. I think, unfortunately, a lot of people believe, well, tax advisors are tax advisors. They know.
Yes. Yeah.
He or she is a lawyer. They know. I mean, I'm an attorney. I've been an attorney for 40 years. I can't tell you how many times people will say to me, my friend is getting divorced. They're in Florida. What do you think about? And I'm like, I don't know Florida divorce law. Guys, I don't even live in America. I've lived overseas for more than half my life. Why should I know Florida's divorce laws? Mm. But it's this misconception that, well, they're lawyers. They know. Well, obviously, we don't know everything, but they think there's this panacea in the term lawyer, or maybe CPA. I'm not sure. But I think if they understand a little bit about the case law and see what the IRS is saying is not reasonable cause, they're going to get scared, like the Polish policeman. IRS said, you don't have reasonable cause. We had another case. It was a person who had ownership in a foreign corporation, and a Form 5471 was never filed indicating his ownership. That's one of these foreign information returns. And he had told his advisor, CPA, I believe, listen, I've got ownership in a Cayman Islands company. I own whatever percent. I think he may have owned the whole thing. And had it, I believe, even on his email correspondence. Do I need to do anything with this? The guy said, no, it's fine, whatever. And the IRS hit them with the penalties for 5471s not being filed, which, by the way, kept his tax return open completely for all those years, because the statute of limitations never started because the form wasn't filed, which meant if he had any other problem with his tax return, IRS could audit him and hit him for other penalties. So that's another big danger with not getting the right advice. But IRS said, no, relying on the tax professional was not enough. It was almost like the IRS was saying, you should have told him he needed to file a Form 5471. It wasn't enough that you told him you owned a foreign corporation in the Caymans. Wow. And the court, because then he paid the penalty, went to court to sue and get the refund. And the court said, IRS, I'm sorry, this is reasonable cause. Yeah. Case dismissed. But a lot of people don't have the wherewithal to take this to court. Yeah. So they pay the penalty and they say, oh, gee, next time I know. Well, right? Proactive instead of reactive.
Well, I guess we won't know, but I wonder if in the original, the Polish case, I wonder if the decision to reject a reasonable cause to begin with, I wonder if that was a case of if they really thought about it and said, yes, he asked, but this person didn't have the required expertise and knowledge to advise in international matters. Therefore, I just wonder what. Otherwise, was it just a?
I don't even think the IRS went that far. Okay?
Wow.
I don't even think they went that far. I think the initial rejection was almost like standard. That's what they do. Okay.
Yes. Yeah.
And then you can go fight them to get the penalty reversed. And as I said, a lot of people don't have the wherewithal to do that. So they let the matter drop. So IRS is thinking, well, we're raking in some pretty big bucks with this stuff, aren't we? So, I leave no issue like closed as a possible reason for why this is happening. The IRS has been made aware of it for several years now by taxpayer advocate services. And we're not seeing a change. Why is that? Why is that? I mean, yes, we're seeing some trickle down. I agree. But how long does it take? I don't know.
As we return back to the 3-part test. So the first part, is your professional, do they have the required expertise and experience? That's part 1. Part 2, surprisingly come across this more than I would like to as well, where again, we might ask if someone's filing FBARs, H938s. The answer is no. And we say, well, you should be doing. They say, well, we have a tax advisor. And then this really happens. I'll say, okay, so you've told them about these forms. And well, no, there's no tax to pay. So we haven't told them. They never said anything. Well, okay. So right then and there, you don't have a reasonable cause argument.
It's difficult.
You haven't told. Oh, it's difficult and more difficult. You certainly can't rely on the tax. The tax. I had a tax preparer because you didn't tell them about it.
I know.
Now you weren't trying to hide tax, but
this is where we run into issues. So many times, tax return preparers do give you a tax organizer. I'm sure you've seen those.
Yes.
And they will have a whole section, if the return preparer is any good, they will have a whole section on foreign or international stuff. And, most times, maybe their clients just exit out. They say, well, I don't have anything. Maybe they don't even read it. Okay, I don't know. But a lot of times, those questions on the questionnaire or the organizer are not clear enough for people. So I've seen one, for example, that said, do you own any foreign financial assets? And the guy said no. And so, of course, I'm dealing with this person, and I said, but sir, you own shares in a foreign company, a non-U.S. company. Yeah, but you know what? That's the same, that's my business here. It's the same country where I'm living, so that's not foreign. Okay.
Oh, well, okay.
What's a foreign financial asset? First of all, many people might not think stock in a company they own that's running their business is a financial asset. You would be thinking more like, oh, it's a hedge fund or something along those lines. They don't know the technical definition under the code. So if you have a tax organizer, you should have your organizer be as clear as possible and say a foreign financial asset means anything like yada, 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 right? Tell them. How is he supposed to know what a foreign financial asset is? So, we use that. Said, look, he did the tax organizer. It was very unclear. He didn't know. And we were okay at the end of the day with that. But there's so many little points that you need to look at and examine in preparing a reasonable cause statement. So the person might have a tax professional. That guy might have the expertise in international issues, but he may not have asked the right questions.
Facts and circumstances. As we wrap up this then, Virginia, we wanted to talk on what's involved, including the cost in preparing a reasonable cause statement. Because to go back to how I started this, I believe there's this perception amongst a lot of people that, okay, my bad. I'll have a conversation. I'll tell them I made a mistake. We'll all get on with our lives. Mm-hmm. You and I know it's not. It's a bit more involved and expensive than that. So can you perhaps tell us a bit about that?
Right. So when people are doing a reasonable cause statement, it should be, I believe, as robust as possible. Now, this is my take on things. It's not every professional's view, although I do find a lot of professionals in my camp with this. Others are more, you know what, we don't have to go through all that. Let's just put the facts down and see what happens. Whatever you like, whatever makes you feel comfortable. I feel comfortable setting it all out, being as detailed as possible, assuming, I've got the best possible facts that I can put out there. I don't want the IRS to hit me and surprise me later and say, oh, you got a tax organizer and you said no on all of these things that ask questions about foreign. I need to look at that. I need to sit and examine what did you say in the past to your advisor. So it's digging. I don't know that every professional digs as much. But again, everyone does their own thing, what they feel is the right and most professional thing to do. Then I look at all of my facts that I've got. I would have the client certify that these are all correct. My understanding is correct. We're going to have several conversations to make sure I've got the facts accurately. And then I'm going to look at the Treasury regulations and the guidance they give me about what's reasonable cause and pinpoint, if I can, in the reasonable cause statement, per Treasury regulation, yada, yada, this is considered an important element of having reasonable cause, and Mr. Client meets that. I would look at the Internal Revenue Manual and see the guidance they give me and do the same accordingly. I would, if I had a case, like the Polish policeman case, if I had, he went and asked his professional before he whatever did the deed and was told it was okay. That was very significant to the court in the Polish policeman case. I would want the IRS to know that I know what's out there as a professional in terms of defending this client and helping them to establish reasonable cause. I want them to feel like I've done my due diligence, that I haven't left anything out, and that, I'm putting the best case forward for the client. So I would say to you, how long would that take? I'm going to say to you, it's an easy 7-8 hour job to do. Prepare the statement, have the client review it, edits, and so forth and so on, easily. And good tax professionals are charging anywhere, I'm going to say, at least $500 an hour to, I know many that are charging $1,500 an hour.
Mm-hmm.
So there you go.
So we're talking several $1,000s to have a good, experienced, qualified professional help you with a reasonable cause statement. And I personally think, knowing what I know about this, you'd be mad to do it any other way. So bear in mind that if you're having to prepare a reasonable cause statement, this is on the back of, you've had penalties levied. And I think people also misunderstand the severity of the penalties. We're talking the penalties for missing informational returns essentially start at $10,000 per form per year. I think they're even higher once you factor in inflation now.
If you've got 3 or 4 companies, right, that you didn't file a 5471, so that's $10,000 per company per year. I mean,
right?
We're already talking, $30,000 for 1 year, $40,000 for 1 year, 3 or 4 companies.
So you're staring tens of thousands of dollars potentially of penalties in the face. You've then got, it's going to cost you several more thousand to mount a decent, reasonable cause defense, and this assumes it goes no further. I know. So again, people, it's better to prepare than to repair. Be proactive, not reactive. That's the central message from this. We're talking, the stakes are high. Mm-hmm. They really are high in US tax. I talk about this. I drop this anecdote all the time, but I'm obviously plugged into the UK tax professional network, and I'll see them lamenting HMRC and decrying penalties that start at like £100. It's just think, guys, you don't know you're born. We're dealing with so much more here in the US.
I know. But, granted, and I have to say, I've been in this field for so long. The rules are so complicated. The U.S. system is so complex. And I get it that the average taxpayer just can't believe. They can't fathom the complexity of some of this stuff.
Virginia, it's complex. It's overwhelming, and it's intimidating and scary coming up against the IRS, who seemingly
they don't seem to have much mercy, when it comes to.
They don't seem to have much mercy, and I wasn't prepared for that when I moved here, and I don't enjoy it, and I don't appreciate it. I don't think it's fair, but it is a system we're in, and I wish more people would understand the risk that is that's there, even if they don't realize it. And for me, that investment in a cross-border tax advisor, or biased, but I say cross-border financial planner and a cross-border estate planning attorney, yes, each year will cost you a little bit more than doing it another way, but it could save you so much time, money, and stress in the future.
Absolutely. I think for your listeners, I do a lot of continuing professional education to educate professionals so that they will understand more about U.S. international tax issues. I find that very rewarding. As you know, I write my blog. I'm a contributor on Forbes. I mentor a lot of young tax professionals to introduce them to the complexity of all of this stuff. And I think it's really important that taxpayers, people who are listening today, say, you know what, I've gotta hook into like a resource that is regular, that is useful, and that I think will basically give me the right information, because there's so much out there and it's so confusing and you don't know what's correct, what's not correct, what's a lot of BS. You don't know if you're an average person. So I would say look to someone that you think is really good. And I think I'm one of those people. And I write every week on my blog. I contribute to Forbes several times a month. And just subscribe. It's free. You don't have to read everything, but you will when you see the headline of an article. Oh, foreign gifts, gifts received from a foreigner, things to look out for, tips to do. You will at least get something in your head to say, well, you know what, maybe I better look a little further. Because let's face it, when the IRS is looking at reasonable cause, they keep looking to this idea of, did you exercise ordinary business care and prudence? And you can't have your head in the sand. Willful blindness is a thing. It's a real thing. Okay.
It is a real thing.
It's a real thing.
It really is.
Look at some of the FBAR penalties for willful blindness. They're astronomical. So, you know what? You might not like to read about tax, but I can assure you, if you look at my one or two of my blogs or what I write on Forbes, it's easily digestible. I've had so many people, and I'm so honored by the compliments I get. Gee, you make it easy. I understand it. And that's what people need. So I feel I'm almost on this mission to help educate people. I mean, the blog is free. You can read it. I happen to really enjoy tax. I have done for 40 years. So I enjoy writing. And it's all available to you. Just have a peek.
Well, you are one of those people. I am an avid reader of your blog, as I know many other in the cross-border community are. Just so people are listening, it's www.us-tax.org.
Correct.
Yeah, great. I am subscribed. Go and subscribe. What I like about them is they're usually short and punchy, and you link. It's full of links to other blogs you've written about certain points, so you can really go down a rabbit hole, and I do regularly. So
and you will understand it. That's important. I hate when I read things online and I don't have a link to say, oh, IRS recently issued a memorandum. Where is it? I want to read it. There's no, yeah, I can't follow it, right? So I get frustrated. But my blog is usually, I'm pretty good with hyperlinks.
So, Virginia, you've been a fantastic guest. Thank you so much for digging into this topic. There's so much we can talk about. I mean, we could just go through your blog basically, and just do topic after topic after topic, and I'd love to. So I hope you'd be open to coming on again in the future to tackle.
Absolutely, Richard. Absolutely. Yeah. As I said, I think people should have an opportunity to just understand a bit more. I mean, obviously they can't become tax experts, but they can understand a bit more, and they can know, oh, I got something here. I have to do something. I have to find the right person to help me. I'm happy to talk about any topic you would like that you find on the blog that you think your listeners would find of interest.
Might regret offering that. Because there's a lot. I genuinely, I'm on it all the time. Because you hit all the topics that I'm interested in, might not be the right word, but are relevant to my practice, and I think are important. I think that are still not widely understood, and we want to spread, like you, I want to spread the word. I want to help people avoid some of these nightmares. I
know, and like you say, an ounce of prevention, it's worth a pound of cure. So yeah, be proactive.
Well, Virginia, thank you so much for being a guest on We're the Brits in America.
Thank you. It's been a pleasure.
Cheers.